Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Sui Chung, CEO of Benchmarks, to discuss key takeaways from the Kraken Intelligence report, which tracks trends in the digital asset space. Sui, it's great to see you again. Welcome back to Trade Talks.
Thank you very much, Jill. Thanks very much for having me. Always a pleasure to share some thoughts on what's going on in the markets.
All right, and everyone wants to know what was behind the recent sell-off we saw in November.
Yeah, I think that what particularly over this weekend just past, what we've seen is really the culmination of it's a bit of a two-step move, this one. The first one was a rotation out of Bitcoin into the altcoins, the so-called altcoins. We saw that Bitcoin was already sort of 18% off its highs. The Bitcoin reference rate hit a high just over $68,000, and that had come down to the early 50s before the weekend, to the mid 50s. And then over the weekend came down pretty dramatically, falling down to 47. So that's an 18% sell-off. And if you compare that to Ether, which only experienced about an 8% sell-off up to the weekend. And then at the weekend, I think the macro news that we saw, the combination of the Omicron variant really filtering its way through all asset classes and a reaction to that. You've obviously got the tapering, from potential tapering from the Fed. That's still a bit of a guessing game as to when and how quickly that will happen. And then the Evergrande situation in China, roiling the debt markets, the credit markets in Asia. All that in combination, that's a pretty heady cocktail for any asset base. And we saw that sharp sell-off, but Bitcoin and crypto, Bitcoin and Ether, are proving pretty resilient today. We see them trading back up, but about 49 by the time I joined you, Jill, 49,000 for Bitcoin. So some of those losses are being pared back as we speak.
And Sui, crypto has typically traded inverse to equities during bouts of volatility, but that trend has shifted, as you mentioned. Is crypto at risk of de-risking along with equities, as we saw in November, and why do you think that could be?
That's an interesting question, Jill. I think when you have major macro events like Fed tapering of bond purchases, like the Omicron variant in the COVID-19 situation, these sorts of big macro events affect all asset classes. Fundamentally, liquidity becomes tightened. There is a sort of risk-off situation that arises. So that's not that surprising. If we cast our minds back to the early parts of 2021, the early parts of this year, we saw some major corrections, and if we cast our minds back even further to the first lockdowns that affected Europe, we obviously saw significant corrections. Bitcoin falling 50% in about a 24-hour period. So it's not unprecedented. And I think that what you mentioned in terms of looking at how crypto moves versus traditional asset classes will become clearer and become more interesting as we see more financial products listed on traditional exchanges, very much targeting traditional investors, come on stream, such as BITO in the US. And just last week, in fact, WisdomTree launched a series of 3 crypto portfolio ETPs here in Europe, tracking a new set of indices, the WisdomTree CF index series provided by ourselves at CF Benchmarks. And here you're seeing products listed on traditional exchanges where the investor base is very much the traditional investor base. And so observing how allocations to traditional assets and then to this new wave of crypto financial products and the relative movements, that's going to give us a much clearer picture as to the behavior of crypto relative to traditional assets, because you're talking about the exact same investor base.
Right, and that's a great point that you make with these new ETP products coming on board. Ethereum also got hit, as you mentioned, but not quite as much as Bitcoin. Are you concerned at all about its bull market trend?
No, I think that what you're seeing in the two big sort of themes in the crypto landscape over the past 6 months have been the rise of DeFi, the rise of dApps, DeFi dApps, metaverse dApps, including NFTs, and they are all part and parcel, of course, of the Ethereum ecosystem. The Ethereum has been the blockchain that has established these real-world uses, real-world services, targeting end users that really are seeking to displace traditional finance, traditional media, traditional culture, or well, maybe not displace, but certainly live alongside them. So the fact that Ethereum has seen that development and therefore the price support we see in Ether is not overall surprising to me, and I don't think that the structural secular trend is about to break anytime soon, as the adoption of these services by end users just continues to grow.
And Sui, interestingly, NFTs did not see weakness and returned a significant percent in the same time. What's behind the recent outperformance we've seen over the past couple months?
Well, I think that as you know, Jill, the interest in NFTs, the adoption, the investment, it's a whole wave of adoption. We're seeing big brands, big content owners enter the space. Interestingly enough, traditional media outlets are increasingly active with their NFT issuance. And now we also see big brands, big product brands, Adidas, who've made some pretty big moves into the metaverse, and of course, issuance of NFTs are tied to their products. This really gives more meat to the bones. It really fleshes out for a lot of investors what the future may look like, a future where we spend time in the metaverse, where activities are conducted in the metaverse, and therefore artifacts and assets such as NFTs that one might own in the metaverse having a whole different impact to our daily lives. And I think it's that theme that's really riding strong, and hence the momentum you see in NFTs.
All right, and finally, to wrap up here, Sui, what's your outlook for crypto into the end of the year and as we kick off 2022?
Well, I think that it's more of the same in terms of volatility, because you do have these competing forces. You have this secular adoption that we talked about across cryptocurrencies, across the crypto ecosystem, the blockchain ecosystem, and at the same time, pretty unprecedented macro headwinds in terms of the Omicron variant, the world's economy having sort of got back to its feet, now facing the uncertainty from the new Omicron variant. Inflation and the reaction to that inflation, that pretty much accepted now across the board that this is sustained inflation. This is not transitory. So what do the world central banks do? What does that do to monetary policy? What does that do to liquidity? And then, how does that affect the mindset of investors, both in traditional assets and, of course, in the crypto space? How that the push and pull of inflationary expectations, sustained inflationary pressure, obviously is good news for crypto assets like Bitcoin with their limited supply, their finite supply. But at the same time, all markets operate on liquidity. And so if liquidity is tighter, what does that mean? So I think when you put it all together, I think it means more volatility.
All right. So we appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you very much, Jill.